Quant is reaching the end of its local trend. Prepare for a correction. We did a video on the 7th of August saying by or before the 21st of August, we are likely to see a top before we see a big pullback. So today we're going to do a further update because Quant is just displaying textbook like Elliott wave patterns. And when we see 5s and 3s, we can get 2 steps ahead of the market to see what's likely to occur next. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Quant. So the video that we did last, it was on the 7th of August. And what we just said, very high level, as a just quick reminder, just in case you didn't see the last video, is that Quant is doing this nice 1, 2, what looks like a 3, 4, 5, nice 5-wave structure. But on the same note, we also said this last part of the movement from here to here typically breaks down to 5 waves also. And we just said 1, 2, something like a 3, 4, 5. And Quant is following this in a very textbook-like fashion. And what we're really doing is measuring buying and selling behavior so we can see what's likely to occur next. So we are preparing for a local top before a correction. So we're going to go into a bit of detail today, and then we can see this unfold. And by the way, if you want access to my Quant chart, you can now get it for free. You can get it as view only, so you'll see all my analysis, and then you can also upload it into your trading view, as well as some of the other charts as well that we have. But you'll see here, Quant is now added. So all the updates that we do today, you'll get exactly the wave counts, the price analysis, the momentum, all the settings, and everything else. So let's dive into a live chart with Quant. Right? So this is where the price is today. So when we did our last video, in fact, why don't we take the data back? Let's take the date back so we can just see where we were. We were on the 7th of August, which was hit. And what we said was Quant based on, so if you're not familiar with my content, what we really use is a very high probability methodology. So I always use the quote, high probability, but never certainties. Probabilities, but never certainties. We're the casino, so we can't guarantee a result, but we can see what's highly probable. And that's how the best traders trade on the planet, is high probability, where we are the casino. Just wanted to get that across. So there's really four things. There's momentum, pattern, price, and time, right? Momentum, pattern, price, and time. So we're going to focus on pattern initially. So what we said with Quant, and we're going to update it because now we've got some more price data. We've had 10 days of price since. The green line is basically the high level wave count. 1, 2, looks like a beautiful wave 3, textbook wave 4, and then we should anticipate a wave 5. And what we said in our last video was these are the typical price zones. This zone over here and this zone over here. We also did some time analysis and said by or before the 21st of August, Quant is likely to reach its top, and then we should anticipate a reversal. And then we drew this red line over here. This red line, if I just emphasize it, because that's going to be our focus today, and we're going to update it. This red line is saying this wave 5, this final part of the move, typically breaks down to 5 waves also. And when it does, we can use that as valuable information to give us an edge on the market, right? An edge. It's called 2 degrees of wave count. So we've got the green, which is wave 1 degree of count, and then we zoom in a bit more, and we'll see these 5 wave patterns unfold again. And what we said, we should anticipate some type of wave 1, wave 2, some type of wave 3, a pullback in a wave 4, and then a final wave 5. So now what we're going to do is just going to zoom into this part of the market, the red part, right? And we're just going to unfold the data again. We're just going to unfold it with Quant. So we're just taking it back to the 7th. Let's just see what's happened. So we had a bit more of a movement to the upside. Let's just squeeze it in a bit more. And then we've had what looks like to be just a textbook A, B, C of a wave 4. So now what this looks like, if we just now update it, is this looks like a wave 3. It's called a wave 3 of a wave 1. So wave 3, a wave 4. And now we should anticipate a wave 5. But because this looks like a very clear wave 3, and I'm going to show you a few other things with momentum that supports this as well, we can be very confident that this price range is going to get exceeded. It's pretty much already exceeded, and Quant is likely to get into this zone over here. So what we can do is we can actually just clean this chart up by just removing these lines. We go, okay, that's no longer going to serve us. Now we've got more information. And this one as well, we can also get rid of that. We can get rid of this as well. All right, perfect. Also, we've passed these time dates as well. So we're likely going to see Quant in these. So we can also just get rid of this as well. All right, so hopefully that makes some sense. So what we're going to do now is we're going to do a bit more detailed analysis. So we did like a macro, more of a macro 5-wave structure. Now we're going to focus on these red lines, the red count. When I say red, is the lines are red. 1, 2, 3, 4, 5. What's the typical end of wave 5 of wave 5? That's what we're gonna focus on. And by the way, just remember, if you want this chart, I'm gonna leave all this up, all the wave counts. When you download the chart, you'll get the 4 chart screen set up. What we're focused on in this top right hand corner, which is the daily chart. So you'll see this over here, like so. And on the top left is the weekly. We got the hourly and the 4-hour as well. So you can literally just download this chart and the other ones as well. And as I update it, you'll get the updates also. All right, so sticking with this, what we're going to do now, I'm just going to get rid of these lines just so we can see things a little clearer. We'll come back to the momentum. So we're going to really just do three things. And it's relatively advanced, but everything is difficult before it's easy. That's just the nature of life, and that's okay. So we're gonna use some information. So first of all, we're gonna do something called an external retracement. That is basically the relationship with a wave 4 and a wave 5, right? An external retracement. What that looks like is, so this is our wave 4, and this is our wave 5, right? An external retracement, basically, we're gonna measure this price action to the downside, and the two ratios that we want is the ones that we used before, 1.272 and 1.618. And it just gives us a more of a narrow cluster of what's likely. And so this is meaning that it's a very high probability zone. Then what we're going to do is we're going to do the wave 1 to 3 to wave 5 relationship. What you get? All right, so this wave 1 to 3 has a direct relationship with wave 5. And the relationship is measured in Fibonacci ratios. It's very, very cool. It's like magic. It's the closest thing that you're going to get to a crystal ball, by the way. There's no crystal ball, but it's the closest thing, right, from my experience of traveling the world and trying to find the best methodology of reading markets, all time frames, not just crypto, but it applies incredibly well to crypto. Most common is 38.2, but we can see that's quite close, so we're probably going to exceed that. It's more likely going to be the 0.618. And then the 100% is an overextension. It's unlikely. So we're just going to keep these two because it's clustered in that range. This one's probably not that relevant. And then we can do a few others as well, but that's enough. That's enough. Then we're also going to do something called a high to high to high time relationship. In other words, markets tend to move in rhythms and cycles. So it's like a dancer dance to a beat, and that beat tends to be quite consistent. And we want to use that information. So what's the relationship here? We're getting this high to this high. How long did it take? We can project that forward to tell us where the next high is likely to be. And it'll probably coincide with the time analysis we already got. So we're going to measure this high to high to high, and then we want the 100%. Right, so it just narrows down our time analysis as well. So that just tells us between 18th and the 21st. A couple of other ones we can also leverage is the low to low. Sorry, the low. I'm gonna do this one as well. It's called the. Actually, I won't do it. I'm just gonna do this one here. It's the low to high, right? This gives us the 20 seconds. So it just widens our range slightly. So basically, we've got a nice cluster in a very high probability zone. So how do we use this information? Well, it depends on what you're doing with quant. Either just as a spectator, or if you're long. So it's like, okay, I want to maximize every ounce of profit out of this before a potential correction. Or if you're looking to go long, short term, there's a potential trade set up. What we're going to do now is just one last thing, right? I use something called a momentum indicator. There's thousands of them. By far, my favorite is the stochastics RSIs, the blue and the red line at the bottom. And when you download the chart, you'll get my exact settings. The main thing that we want from the momentum indicator is that it gives us valuable information. And the ideal is where the blue line crosses over the red, the lows marry up quite nicely, right? They marry up quite nicely. So this one here tells us we're at or above this high, this is going to likely hold, especially now that we've had this move to the upside. So that gives us valuable information. But also look at it from the tops, right? We can see when this top, they just marry up, not perfectly, but it gives us pretty good information that you can see these tops marry up quite nicely. So what does this tell us, and why is this important, and how can we use the momentum in conjunction with pattern? We've got the wave counts, the wave 505. We've got price and time. I know it's quite high level that I'm doing here because I'm going into quite a lot of detail. But this cluster zone over here, very, very important. And then the momentum. Well, how we use this is we just say, right, we should anticipate Quant is likely to go sideways to up as long as the momentum is sideways to up. And when the blue and the red line go above this black line over here, it indicates to us, hence it's an indicator, it indicates to us that Quant is likely to make a local daily top. But when that coincides with a 5-wave pattern sequence, it combines with key Fibonacci ratios of multiple degrees and with Fibonacci time, all of a sudden you have a phenomenal high probability that we're going to see that top. And then we can look at, okay, Jagir, what's likely to occur after the top? What typically occurs. And we're going to look at that today as well. We covered it in our last video on the 7th, but I think it'll be good just to recap. So what are we anticipating? Well, we're anticipating one more leg to the upside between this date range over here. When the blue line on the indicator goes below the red, so we get like a momentum, a bearish reversal, this will give us a clue, a big clue. I'm just drawing it like this, so we just kind of clean it up. That'll be fine. If I just do it like so, hopefully that makes sense. It just gives us a clue that the momentum will tell us right now we need to be on high alert. So if you're trading a stop loss, you can trail it tighter to the market and just maximize your profits. All right, so let's just now finish on. All right, if it plays out, and it is still an if, even though it looks like just textbook, it's like, it doesn't get much better than this, even though it just, this is like, if I was going to choose when I do my next training, I'll probably use this as a textbook scenario on Elliott wave, right? Elliott wave analysis combined with Fibonacci time and price. At this stage, there is no way of knowing how it's going to unfold, right? All we can say is it's really highly probable that we're going to see this and then some type of correction, right? And we're going to go into the correction. So remember, you can now download, this is my book, but we can get my book for free as well in the description link. But I wanted to emphasize the charts. Make sure you get in the chart of Quant, because then you can go into a bit more detail yourself and just kind of get used to the price action and just see how it unfolds. Just watch it day by day. And again, it's not a crystal ball, but it's the closest thing that I've ever found towards a crystal ball. All right. So what typically occurs after a 5-wave structure to the upside? Well, it's typically a correction. And we said this in the YouTube video, right? If I just forward the YouTube video from the 7th, what we pretty much said, if I just put it to here, I think it's here, was this, right? We said, and again, we'll emphasize it, after a 5-wave sequence has completed, what you typically get is some type of A, B, C correction in the typical Fibonacci time and price zone. So we'll just do a quick recap on that as well, because now we're getting very close. We're like, it's the 17th today, so within the next 5 days is likely, and understand and hear my language, is likely and highly probable. So it's probabilities, never certainties, that we're going to get a reversal because there's 2 degrees of wave counts. There's momentum, pattern, price, and time. That is what you call a confluence of events. But we still have a question mark here, right? That just says, look, anything can happen. So prepare for anything. All right, so let's just do this very quick as well, and then we'll wrap up. Let's assume it corrects by or on the 21st, right? Again, we will update this as we get confirmation. We haven't got confirmation yet. And then we'll just do a Fibonacci retracement. We're going to take the low over here to the high. Again, we have to speculate on what price is going to reach. We don't know that information yet, but we'll get confirmation over time. But then more often than not, what will typically occur is a correction into this range, right? So why is this important? Well, if you're long quant and you're long, like long-term long, right? So you're just hodling quant for until Bitcoin reaches all-time new highs, you can kind of get context on this, where we go, okay, if we look at the grand scheme of things over here, we clearly got this big correction with quant. No two ways about it. That's been since September last year. Big correction. But we've got this pretty impulsive 5-wave move to the upside. So what are we anticipating? What we're anticipating is the first impulsive move to the upside, which is what we're seeing right now unfold. We're probably going to get some type of correction, right? So you have to make a decision on, do you lock in profits now and wait for a correction to unfold and then rebuy? If you're looking to get into quant, it's to be patient for the correction. It might take a couple of weeks. Again, high probability, that's what we're always looking at. But then also knowing that if quant unfolds like this, what we're looking at potentially is that the market will likely break all-time new highs eventually. So what does that mean? Just pay attention to the orange. It means over time, probably going to reach these zones first, this zone and this zone, but it's likely over time we're going to hit all-time new highs. So when you're looking at this and going, oh geez, quant's going to likely drop to like $80 from, I don't know, it's like 118 today. Okay, well, if you're confident in the price action that is going to go above $400, well, then you got nothing to worry about. But again, it's just to manage your trade and what your expectations are and how you're going to manage your position. And that's the whole point of this, right? We're going to manage your trade with high probability, with logic. Let me just get that back in. I'm just gonna zoom out. I just want to finish on this over here, like this. So just to summarize with quant, just so we're all on the same page, we're looking for one more move to the upside to finish a wave 5 of a wave 5. If it unfolds that way, be on high alert that we're probably going to see a high that's going to hold for a number of weeks, maybe as long as early October, mid-September, thereabouts. So it's not an overnight correction. And the market needs that time to just take a breather, to relax, to correct. And that's a natural, healthy movement. And then we'll probably get a next impulsive wave to the upside. So again, if you want access to this chart, make sure it's in the description link below. You can download it for free. You'll get a view-only mode, but you can also copy the chart into your own trading view and use it as you see fit and do your own analysis, and you'll get all my settings as well. So if you like today's content, like, subscribe, hit the bell notification. Let's finish on a quote. You can actually get my book for free now as well. You can download it in the link below. Got some phenomenal stuff in there on mindset. But the quote I want to finish today on is from Confucius. I'll start every chapter with a quote. Confucius: it does not matter how slowly you go, as long as you do not stop. Most people, from my experience, overestimate what they can do short term, but very much underestimate what they can do long term. And it's all about the long term game. Crypto's here to stay. We're going to see some dynamic price movements up and down over not only the months, but years to come. There's going to be plenty of opportunity. So as to keep sharpening your skill set over and over again, so you can kind of really get ready to win this game long term, right? So just be aware of that. So it does not matter how slowly you go, as long as you do not stop. All right, see you soon.